out from KPIT Technologies how their business has been looking. This has been one of the performing stocks, much unlike the rest of the IT sector, all through past year and this one. Sachin Tikekar, President and Joint MD KPIT Tech, is on the show right now. Sachin, hi, morning. Good to have you on the show. Your revenue growth guidance for FY25, which is also kind of dependent on the likely deal wins in the subsequent quarters, or based solely on the deals which are which you've already won in FY24 and prior to that. Just wanted to understand, what is it that you're basing your guidance on?
Hi, good morning to all of you. Thanks for having me over. It's a combination of multiple things. One is the pipeline that we already created. Usually, we work with a handful of clients and we know what kind of programs they're working on. And based on their programs, when they're likely to come through and which cycle they're going to go through, we get a pretty decent feeling about what the when the programs will come, when they are likely to get over, and so forth. So, in short, to answer your question, about 70% of our businesses sort of gets extended in the following year. And it's 30% that we usually start new, and that gets converted during the current year. You've seen that the pipeline is looking solid. It's actually grown quite a bit, and that gives us the confidence that we'll be in the range of 18 to 22% in the new year in terms of growth.
70% is quite a sizable mark, because last year we had seen you had upgraded your guidance mid-year. You see a possibility of that happening this year too then?
Yeah, it's way too early to say anything at this. We are 3 weeks into the year, and it's way too early. I mean, the effort will be to make sure that we keep pushing the boundaries. Some things have changed, and it's important that we discuss. There is, from our perspective, there are tailwinds in terms of how we are starting the year and so forth. However, there are also uncertainties that are popping up. Some of them are geopolitical in nature. Some of them just are existing clients feeling more pressure, especially from the OEMs from China. So we don't know how this is going to play out. So we just want to be a little more mindful this year, unlike the last 2 years. Having said that, we are fairly certain that we'll be in the range of 18 to 22%. And as always, if there is any change in the guidance, we typically do that at the end of Q3.
I wonder how geopolitics is affecting you. I'm just trying to understand.
Yes.
How is that affecting you? When you say it's an uncertainty, why? Because geopolitics is very small. I mean, Ukraine, Russia, something does not affect your business. What's happening in Middle East, it does not affect your business. So from a client standpoint, since you mentioned geopolitics, I'm trying to understand the thought behind it.
Yeah, so when I say geopolitics, I think there are two. So if you look at Europe at this point in time, because of the war that is going on, Europe, actually, if you look at the macroeconomics of Europe, year on year is not looking all that great. So that puts some pressure on the OEMs and the countries that matter to us, especially Germany, France, and other parts in Central Europe. So that's one part. Second part is the whole the divide that is getting created between China and the rest of the world. China, as you know, is the largest producer. It's not only the biggest market for car makers, but it's also the largest producers of the car. And now the world is feeling the heat from China, and we don't know how that's going to play out, whether there are going to be trade barriers coming up and so forth. So given all of this, there is a little bit of a flux in the system. We just want to make sure that we are very mindful of that and we take the right steps in the interest of our clients and do the best we can to keep them competitive. That's the part, if that makes any sense.
Thank you very much. I just wanted to connect the dots here. The standout feature for KPIT has been their entire change of gear or the entire model shift towards EVs, electric vehicles, automotive engineering, how much of your current business can broadly be called as business which is coming from pure EV stroke embedded EV services?
Okay, so what we do is we are a software and system integrator for automakers, not just the passenger car, but also the truck makers. And 100% of our business actually comes from this area. There is just one large industry that we serve, and all the work that we do is embedded software and system work. And of course, there is integration on the hardware, and there is some vehicle engineering work, but 100% of our business comes from that. Within that, there are, let's say, a few parts to it. One is, as you called out, the electrification, or let's just say alternate powertrains. The investments in the internal combustion engines are still there, especially in trucks, they'll continue. Then there is what we call battery electric, which is 100% electric vehicle. Now you also hear about different types of hybrids. So hybrids have both the engine as well as they have the battery part. So that part, the propulsion part, is the largest part of our business. And the rest of it is actually autonomous driving, e-cockpit, and also the middleware and central architecture. So those are the four big boulders that make up almost 100% of our business.
How much of a business is now coming from India? Because Indian companies are also, at least the auto sector is making a comeback. The cars are no longer, the cars of today are no longer the cars which were only driven by mechanical, mechanical and only because of mechanics. Now there's a strong electronic component in it. How is your India business doing, and is that a high growth business for you?
India, so we're very encouraged to see the growth that we've seen in India business. If you look at India business, again, there are two parts to it. One, many of the global OEMs, the car makers and the truck makers that we work with, India is a market for them. So from that perspective, that business is pretty good. And then there are a handful of Indian OEMs, some of them in the passenger car area and some of them on the truck side. On passenger cars, you have Maruti Suzuki and Mahindras and Tatas. Those are the three big ones. We work, so they have not been part of our T25 for all these years, but now that, as to your point, there is more electronics and there is more software in it, and the vehicles are become modern, even in India, there is more sort of mutual interest to see how we can actually do business in future. But as far as our global OEMs are concerned who have business in India, we continue to do some work for them, even for their business here in India. So net from our perspective, India is going to be one market that will continue to grow substantially in terms of number of vehicles being sold. And the rest of we can't really say the same about the rest of the world. If you look at China or Europe or even the US, the growth rate of the number of vehicles sold is not going to be anywhere close to that of India if you take a 5 or 7 year sort of window. So given that, we believe, and we are headquartered out of India, we understand the market reasonably well. I think our engagements in India are going to increase over the next few years.
Okay, thank you for sharing with us those insights as well as what the outlook is when it comes to KPIT Tech. Solid growth in the India business and the pipeline looks very solid. That's the view coming in. All right, let's move on. Some news and updates.
If you like this video, then like, share and subscribe to ET Now.